Hello, hello, hello. This is Currency Watch. Hi there, traders. Hope everybody's having a good day. A little bit of difficulty today with the software, computers crashing. But you know what they say, what simultaneous improvisation is a true sign of genius? Well, I made it work. Sound a little bit cocky there, but let's go ahead and take a look first off at the trades I have in play in the USD CAD, the order in the USD JPY, and then we'll look at the stacker setups in the euro, the pound, and then the rest of the majors. Let's start off with the USD CAD. The USD CAD continues to crawl higher. I was looking for a break of 134. Been hard at best to break above that. What am I saying hard at best? Today it's had a little bit of resistance at that level, but we still continue to push higher, up about 110 pips. The trades at break even. I could, if I was so inclined, move my stop up, but I'm not 100% sure. We could see a pullback to the 133 level, and the 10-day moving average is right there. So I'm going to keep everything currently the way it is and wait for a break of 135 to move my stop loss up with this pair. USD JPY, I've been saying for the last few days that I need a break of 104.50. We had the break on Tuesday, but it was a head fake, came back, which made me a little bit hesitant to jump into that right in the get-go this morning. But we did break, and we did break above the highs that were on Tuesday, which I believe are at 104.90, and now the pair has continued to push higher, and it looks like we're going to stop at 105.25. I put my order at 104.80. And I have my stop loss at 104.25, which is 5 or so pips below the day low. I will be looking for a continued push higher towards the 107 level, the 200-day moving average, and excuse me, and I put the order in at 104.80 because I believe in Asia, and most of the time you do get a pullback, even though this would be 45 pip. It wouldn't be a huge pullback. We'll get a pullback to the 104.80 level. I mean, in Asia you get a pullback, and in doing so, we will make the it will make me more comfortable with the risk I'm willing to take on this trade, looking for the push higher. Let's look at the stacker setups. First off, the Euro USD, after being closed out on my push lower at 109.30, I believe. Yeah, 109.30. The pair has moved up, test the 10 days moving average, and basically today you can say it did just about nothing. So at this point, I need to see a break of the 10-day moving average, which basically coincides with the resistance level we currently have at 109.50, or a continued push lower at the 108.50 level. I would rather see a break to the top side, because I believe any push down to the bottom, bound lower, 108.50 is going to find resistance pretty much right away at 106 all the way through 104. Those are just like the yearly lows for the last year and a half, and those are going to be hard eggs to crack. But we could get a push back to the top side. We could easily rally back up towards the 112 level in the short term. Of course, this will all depend on the GDP figures and more likely the outcome of the upcoming election in the United States. Great Britain pound, same scenario. Well, actually, even worse case scenario. This pair has just been range bound. I wanted on the Twitter feed showed exactly how I would have done a stacker trade in this, and I specified that this candle is highly unusual. I mean, you get them every couple years, but it makes it difficult to work. Basically, you can avoid that candle, pretend it didn't happen. I actually exited the trade there, but you can see that this would be the new push down lower, and if you were still active in the trade, your stop loss would be for a break above the 123.75, and you'd be looking for a break below that level at 120.85. What I'm looking for now is a break either way in those ranges. I would like to see a push higher, just because we've had such a large push lower, but that's really not a reason to have a trade. And I believe quite a few people are set up that same exact way. So the only way I'm going to go higher is if we get a break of the 5,200 1 hour moving averages, which we had a rejection on the 200 today, and you can stand, I'll show you in a bit that it has rejected at that level quite a few times, or if we do get a break of the 123.75. But if we push below this 120.85, I will jump in, go lower. And if we look on the hourly chart, you can see we have rejected at this level, I think 5-6 times. Let's see, we rejected once, twice, 3, 4, 5, 6 times on this push lower. So the 200 has been a tough barrier to get across. But you know what? We have been in sort of a consolidation pattern as of late. So if it's going to happen, this seems like a good time for it to happen. The USD, not touching this with a 10-foot snake. 10-foot stake or 10-foot stick, you can see that this pair has been capped by the 200, but the 7760 level has acted as a barrier. I want to see a break of the 7076 level or the 200-day moving average to be tested, and I'd like to see a bounce. And all in all, I do favor a continued push higher in this pair, which kind of contradicts the New Zealand USD trade, but you can see that I was short, everybody knows, from the 7160 level, and that was basically due to a bounce I was looking for in the 200-day moving average. We hit the 10-day. I went long actually there, and we hit the 10-day. I mean the 50-day. I closed out on this rejection, and then I was looking for a little bit of follow through, and we sidelined. We went sideways for 2-3 days, and I decided to jump out of that trade because, as you guys all know, there's a lot of fib battles going on here. That's the exact 50 fib from this push lower, and right here I think at 71.50.60 is the 50 fib from this push higher. We have trend line support and the 200-day moving average. What I'll be watching is if we come down to this and bounce, I'll try to go long. If we break this and coincides with the 200-day moving average, I'm going to take that as a good sign to jump in this pair and look for a continued push lower. Let's look at some of the more unusual pairs that not unusual, just unusual for me to trade. Euro JPY, as I've spoken many times, consolidation. Great Britain JPY trying to get his leg up. Well, I'd like to see a break of this 128.60 level before I'd be comfortable jumping into that pair. And the Great Britain Oz, this is an interesting setup. It looks like we could be forming a bottom, at least for a bounce up to the 200. If we get a break out of this immediate range, basically a daily close, clean daily close above the 10-day moving average, I could jump in for a scalp up to the 50-day. Gold has done nothing over the last few days, still inside this range. We need a break of 1277 or 1260. We could get that with GDP tomorrow, or could wait until the elections. What I've been trading though is the dust and the nugget. I've put a couple charts up that on the blog today. The dust has had a great day pushing higher, and I explained. Let's see if I don't know if I still have that a trading account open. I do not actually, but we can put dust up on here. Just give me a moment. And what we see here is, you see nothing here because that's the daily chart, but as you see here, we'll even do a 1 minute chart. We had an opening range, a 5 minute chart. We have to go down to 1 minute. This isn't going to be 100% accurate in what we're going to see, but basically what I'm looking for in these 1 minute charts is that there's an opening range, and then with the break of that opening range, I want to see a cross of the 250-day moving average. When we had the cross of the 50-day and 2 moving average today, when you take into account the opening, take into account pre-market trading, because that is what I take, because you could trade there just as well as anywhere else. But unfortunately, this TradingView software doesn't capture it as well. I'd have to use the Fidelity Pro version. What we had is, by the time it triggered for me to go in, the chair was trading around the 4160 level, and when at the 4160 level, what I would be looking for is continued push higher, looking for a dollar. But I was keying in on the 10-day, 50-day moving average for another cross there, so it would be an indication to leave. And at that point, I think the spread was about $1.20. It didn't even have a 1-1 risk reward, so I decided to stay out of it. But what I did talk about is I was looking for a pullback to the 10-day moving average. We had that, then shot up another $1, so it turned out to be pretty nice, and I hit my target. And now we're getting a reversal. Tomorrow could be interesting in pre-market, which with the GDP, which I believe would come out at 8:30 Eastern time, and we could get some moves to play with in this pair around the open. And I spoke to you guys about BMY, just another trade, another stock I like to mess around with. And as I said, as long as it stayed above the 51.20.30 level, things look good. We did break back down below it, then we pushed up to 53. But as long as we get a close here, we have the opportunity above 51.30 to look for a gap up, move up higher to the 55 level. And if we get to that 55 level, probably coincide with the 10-day moving average, then I'll be looking for a break of that 55.89 level for a continued push higher. That is it for the day. I hope everybody has a great one. This is Currency Watch, and I will talk to you guys soon.